Good evening, everybody, and welcome to tonight's live market analysis session, pinch and a punch, because it is, of course, the first day of the month. Welcome, of course, to our weekly look at all things markets. The disclaimer is very important before we get started because it reminds us all that everything we're going to discuss today, it's just information. How you use that information ultimately is up to you, and that's really the point of this disclaimer. Everything you hear needs to be considered within your own personal objectives, situations, circumstances, and you should really be taking all reasonable steps to fully understand how this information might impact you if you decide to implement it. And of course, it's very sensible to seek the help of a financial professional to help you implement this information. It's very important to also remember that trading, investing is risky. Markets go up, markets go down. Probably you're going to lose money somewhere along the way. And ultimately it's you and not I who's responsible for everything that you choose to do. With the boring but important bit out of the way, it's up to you now. Head over to your chat window somewhere there on your Google Meet screen. Enter any stock or index or crypto or commodity, anything you're interested in talking about. And I'll give you my best technical analysis reader on that, or anything you want to talk about trading. The 3 M's we often discuss: your methodology, that's how you get into and out of trades; your money management, that's how much you risk on your trades; and your mindset, that's how you think about your trading. You can ask me anything about that as well. Okay, let's head over to the Amy Broker screen. There it is. I'm going to check your requests, make sure they are rolling in. Hi, from Linda. Hi, how do I get the recording every week? Linda, I send them out to you. So if I'm pretty sure you're on the list, but you know my email address is just carl@livemarketanalysis.com. Send me an email and we'll double check to make sure you're on the list. I'm pretty sure you are. But possibly then there's a problem at your end. Maybe there's a spam filter that's causing my emails to be sent to spam or junk mail. So we can troubleshoot some of those things. Send me an email offline. From Colin, can we look at Ramelius, Ramsay and A2 Milk? We certainly can. Sudesh is after gold, and then they're coming in from there, which is great. What I might do for everybody who no doubt is going to catch the recording, I think that's going to be most people this time around, given it's a public holiday in Australia. Let's do the whip around the grounds very quickly. Not much to see here, that's why. We can do this one very quickly. We're still very much intact on the trends in the Nasdaq composite, one of the 2 key risk-on gauges in the US. The other one, of course, is the Russell 2000, and we've had a pretty good week there on the Russell Thursday and Friday, breaking out to new highs, not all-time highs. What's the right word for it? Intermediate highs, recent highs. Let me head back there and we'll go over here and look at it on this chart because it's got less markings on it. Oh, look at this. Oh, I wonder when I drew that. That would have been a long time ago, probably back in October. I don't think I would have predicted something like that, but it would have certainly have said, hey, when we're doing a measured move, and I reckon that's probably similar to that, this could be the potential downside, because often with a measured move, you will take, for example, that distance, and then you'll measure it from there, and you'll say, well, that predicts a potential downside target. Certainly, that didn't play out. We hit the zone of demand. We know this is a pretty major zone of demand here. We've bounced back up. Some pretty nice candles, actually, off that level. We've got ourselves back above the long-term uptrend ribbon. It has turned back to green, which is good. Short-term trend ribbon is well established. And on the weekly chart, we do exactly the same analysis. Nothing changes. And if you only ever use a weekly chart, then I think you're doing yourself a great service, because you're going to really minimize your emotions in the market, checking the market once a week. You can, ladies and gentlemen, just trade on weekly charts and the analysis is identical. It automatically makes you longer term, 5 times longer. How much longer term do I become on a weekly chart, Carl? 5 times longer term. I can put an exact number on it because there are 5 trading days in a week. Each one of these candles representing a week. But it's the same sort of thing. We've come up, we've pulled back. We've retested both the short-term trend ribbon and the long-term trend ribbon. That's usually a good sign. We're into higher peaks and high troughs, and the candles are predominantly white. So everything's hunky-dory here on the Russell, and obviously we start to look at upside targets. Let's move some of these lines around. I'm going to get rid of that because I don't think it's relevant anymore, and we'll get rid of that one, but we might just copy this one and paste it over here. We're actually at a bit of a level now, aren't we? And then the next level will be there, and then the next level will be there, and we're going to climb the wall. Bear markets are always about climbing back up the wall, and that's what we're doing here. But everything looks hunky-dory on the Russell. Nothing on the Nasdaq suggests that we've got anything to worry about anytime soon, and the S&P 500 just looks off the charts, almost literally good. Now, I can't see the future. We could literally be here, couldn't we? We could be on that candle, and the next candle is the first candle of a bear market. I don't know. But all I can see is just this wall of demand. And we're probably more like in this sort of a zone, aren't we? It feels like this, and these trends can extend for a year or two when they do. They will end. This trend will end. Don't get me wrong, but it doesn't look like it's going to end in the near future. So we had talked about, I guess, and I think it's very worthwhile looking at these weekly charts from time to time in these sessions. I know we're more daily traders, but we had talked about on this candle here, just paring back some risk, maybe not adding some new risk to the portfolio, being more aggressive on potential exits, and we hadn't actually gone to this move back to the point where we're back into full risk position. I think last week I said let's just stick with that for a little bit longer. I can't see any reason to stay there anymore. I think with that move in the Russell, I think we can go back to a full risk position now on a portfolio basis. Okay, let's see if the positivity is global. Certainly looks like it is. We're over in France now. Let's head to Germany. We're getting this coordinated application of capital. It's a risk on environment. Even the FTSE starting to look good. I'm not going to look at Spain. Who cares about Spain? On the Hang Seng, not as good. We're still lagging over there in Hong Kong, of course, which is really an offshoot of the Chinese market. Now, having said that, let's look at the Chinese market. Well, starting to look a little bit shaky there, wasn't it? But no, powered back pretty well towards the end of the week. And more, this has been my prediction's too strong a word, but let's call it an intuition or a gut feel at this stage that we are trying to turn this trend in China, and potentially this long-term uptrend will become a zone of dynamic support, and we could actually see some higher retracements from there. That's even better. So that kind of makes more sense to me than the other one. This has held it so well. We've got really strong demand, their dynamic demand at the short-term uptrend ribbon, and the long-term uptrend ribbon is showing even more support, dynamic support, and that actually looks really good for a turnaround play. This is almost your textbook turnaround play. If this is a stock, that's the language we'd be applying to this. So that's actually really encouraging, isn't it, for us over here in Australia with a big resources sector to see that Chinese market starting to pick up. If we head over to the Nikkei, that's the Nifty 50, I should say. A strong trend, but not as strong as some of the other ones we've seen. And the Nikkei has had a little bit of a pullback, but otherwise I think it's still fine. I don't like that big black candle at the end there. It is disturbing. But one candle does not a reversal make unless it's a species-ending event. I would keep an eye on that, but the rest of it looks fine. Let us then quickly have a look at the Aussie market, and we are looking at the daily chart there. It's an improving run. It's hardly a clean run like we've seen, for example, on the DAX or the S&P 500. It's a little bit more choppy. That means there's more indecision, but it is still, nonetheless, a very good uptrend. We're record highs, all hunky-dory here. That should make everybody out there with money invested in the stock market feel very good about themselves. These are the good times, ladies and gentlemen. Enjoy them. The goal here is to make hay while the sun is shining, because you don't know when the clouds are going to come in. But we are in a good position here. That's the discretionary sector. It looks excellent. The energy sector is a long way behind. Not the worst, but a long way behind. Financials are fine. Gold sector looks pretty good. Healthcare, not bad. Information technology, maybe losing a little bit of steam there, but still very, very good. That is the other technology index is fine. Materials, a big laggard here. Maybe we'll see a little bit of a catch-up with what we're seeing there in China. That's the resources index, looks a bit like energy. A little bit disturbing, isn't it, that energy and resources aren't doing their job because everything else is going up and everything else really should be going up because we're going to get some global growth down the track. The resources and energy sector might tell you, property looks fantastic. It's up there with discretionary. It's one of the two best sectors we've seen. Staples is a bit boring. I wouldn't be looking too much in there. Technology is fine, bouncing off the long-term trend ribbon. Utilities looks half decent actually for a bit of a turnaround, and we're at the bottom of those sector lists. While we're here, should we look at anything else that's worthwhile? Let's go to base metals. We know there's a lot of talk at the moment about copper and how it's facing a looming shortfall, and the prices certainly have moved. And is this the beginning of the big move? There's nothing to suggest that the big move hasn't started. We have certainly broken out of that long-term downtrend ribbon. The downtrend ribbon, in fact, has turned to an uptrend ribbon. I won't zoom in, take my word for it. That's just crossed over there. And the short-term trend ribbon is good. It's holding the price pretty well. We've had a pullback to the price, and that's okay too. It's a sharp pullback, so we're on alert, but we're not alarmed. A price action uptrend like this forming through here, and then a lower set of peaks and troughs, that would be concerning, okay? Because then you've got two major peaks, the second one lower than the first. That's just disturbing. But in the absence of that, we're okay. And whilst we are trading above the long-term trend ribbon, everything is fine. Okay, so happy with copper. Let's look for whether this growth is starting to appear. We know the Chinese market's starting to turn up. Aluminium, I think, looks half decent. What's different to this rally? We've got ourselves back above the long-term trend ribbon. What's different from this one? Do you notice what's different from this one? Hopefully you can see that. This one we went straight up, and then straight back through again. This time we've gone up. We've got two troughs, 2 points of demand above that long-term trend ribbon. So it's telling you we're going from the previous dynamic resistance that it was now to potentially acting as dynamic support, and that is crucial for our turnaround play. So that's half encouraging there. On aluminium, nickel still looks rubbish. Okay, and there's a real supply problem with nickel. There's just too much of this cheap nickel pig iron that's coming out of Indonesia at the moment. Lead looks bloody awful as well. Tin looks half decent there, maybe better than half decent, and zinc is in the same boat as nickel and was it lead? So it's not a synchronous growth in base metals, isn't it? And maybe that's a little bit disturbing. I haven't done the lithium update for today. I'll do that after this session, but we can see there it is starting to look a little bit heavy, isn't it, on the supply side? And I think these three peaks here are telling me that we're in this bump along the bottom scenario, which is, to be fair, what I called. I didn't call the V-shaped recovery. I said we're probably going to bump along the bottom, and that's where we are. Lithium carbonate there, lithium hydroxide, and spodumene concentrate. A slow grind off the bottom. Let's have a look at gold. Looks fantastic, doesn't it? It's a very, very strong chart there. You would expect maybe then that US dollars probably coming off. I haven't looked at that chart for a while. Or interest rates are coming down. We're going to look at those in a second. But otherwise, for the gold bugs out there, I know a few of you are listening. That's a pretty good chart for you. Let us quickly head over to the trading view screen. And we're going to just mop up the rest of the whip around the grounds. And we can see here that bond yields are coming down. That's the Australian 10-year bond. That's, well, I was going to say largely reflected in the Japanese 10-year bond. Japanese 10-year bond's pretty flat. Nothing too sinister going on there. We don't want to see that go up. To be fair, we don't want to see any of these go up. And it's benign at this stage. Hey, it could go either way. That's what that chart's telling you. It's very sideways at the moment, still in a bit of an uptrend, but nothing too sinister to derail that big run we're seeing in stocks. Let's have a look at this for a while. This is your 10-year interest rate expectations, and we are seeing here That's your 10-year break-even in inflation rate, I should say. Yes, so that's your inflation expectation, and we're about 2.3%. If that was a chart, you'd almost say it was a turnaround play, which is not great. We don't want to see that one heading up. And that's an interesting one. I haven't looked at that one for a while. The only thing we haven't really done here is look at our banking indices, and we're looking for, we're okay there. We're looking for, canaries in the mine shaft, red flags to derail the bull market via a banking crisis, a credit crunch, and we're not seeing it there. If anything, we're in the clear. I mean, we're actually properly in the clear. This was March last year. It was literally last year. The markets were in just absolute turmoil because we thought we were at risk of another credit crunch, another banking crisis. It hasn't happened, and I'm telling you, it's not going to happen anytime soon. Oh, well, that was the big banks. The little banks are a little bit better, aren't they? But I think we're okay there. Oh, that's interesting. That last chart's interesting. Look, what would we give this? We'd give it an A, wouldn't we? Or a very, very good B+. All of these key macro themes we've seen for this week. I think we're pretty good there. Let us head back to your request now. We're going to go back to Amy Broker here. And not many, we'll get through these pretty quickly tonight. RMS is the first one. Ramelius Resources, one of the gold stocks. I did cover this in ChartWatch in one of our evening wraps on Market Index. And I said, look, just keep an eye out for, I'm going to head over here. I don't want to foul up that other chart. So we'll head here and we'll go zoom, normal, and we're going to draw a bit of a box, I reckon, in red here, because this was our key supply zone. And when we create these points of supply, that's what that one is there. There's your point of supply, and it ended up becoming a major point of supply. And the way to differentiate your major point of supply from just your regular point of supply is the major point of supply has a medium-term downtrend on its right-hand side. So a series of lower peaks and lower troughs, and that's what we're seeing through here. And on its left-hand side, we'll see the opposite. We'll see the higher peaks and higher troughs. And I've taught you how to do this many, many times. We're just looking at our higher highs and higher lows on a candle-by-candle basis, and our lower highs and lower lows. I might have missed one or two just in trying to do this very quickly, but I think that's pretty close. And what we'll note here is this is also an MPOS. Right? That's an MPOS because we have our uptrend on this side, downtrend on this side. That makes this an MPOD. Okay, this makes this an MPOD here because we will eventually, even though that's a straight line, we will move back into higher peaks and higher troughs. I'd say that's just a regular one. This one actually ended up being an MPOS. I know I'm doing this quickly, so I apologise if I've made any errors here. That's an MPOD, MPOS, MPOD. And yeah, I mean, we can see here that it's a little bit unusual in that we haven't seen the rising major points of demand just yet, but still very, very strong. We can see that we've had a first test here of your major point of supply. That major point of supply is actually really a second test. And you can see once you've had these extra tests, it's a lot easier to get through. And that's why we printed, I mean, look at what we printed this time. Over here, you can see how that supply was it was very strong, wasn't it? It manifested itself with that big supply side candle, and then you gap down on the next one. Like, you cannot get a better manifestation of supply from a major point of supply than what happened here. And then look at this. We've got these two black candles, right? So that's your first test. We're eroding some of this supply. Second test, eroding more of it. And then look what happens when we get to it this time. We're seeing white candles here. And it's telling you that we're through, and you can just see now you've got a much higher probability of success of a breakout than you did at both of these points. Okay, and this is just reading the market. I mean, anybody can read these things if their eyes are tuned in to demand and supply, and that's what we're seeing. And demand is very, very strong here. Wonderful, wonderful price action through here. Great candles, no complaints. Trends are turning up. Very, very happy with this one. Let's maybe do a bit of a tour to gold and see if we can find any gold plays better than that. Let's go to Northern Star. I'm just trying to think of the bigger ones here. In fact, I can do one better. We can go into this list here, gold and precious metals. Why don't we start at the minnows and go down? I think we've got some time to do this tonight, but it will give you an insight into this scanning process. I mean, you can get watch lists off the internet. You can probably find a gold sector watch list off the internet or a sector you're interested in, convert those into a TradingView watch list, and then literally do this in your TradingView. Tab down each one of these and scan through a whole sector or on a sector by sector basis. So we can see straight away the beauty of these trend ribbons, which you now have on your TradingView as well. We can move through a list very quickly because unless you see at least an amber on that long-term trend, why do you need to dwell? You might spend an extra second on this chart, and it's not the worst looking chart. There is definitely an uptrend there, but look how sketchy and how overlappy this one is. A 7-cent stock, but I'd say there's not a lot of liquidity going on here. Look, I wouldn't buy this, but there's an uptrend there, and then we can move through something like that very quickly. Look, this looks half interesting. I'm going to skip over it, but you can see we are interacting with the long-term downtrend ribbon. It hasn't turned amber yet, so I'll probably get through this. But this might be half decent there. Is this an aggressive setup? It probably could be shortlisted as an aggressive setup with a small entry here, small risk entry, in advance of a turnaround play. And that's how I would look at that one. So I wouldn't mind if you shortlisted that one, but you're understanding that because it's more of an aggressive setup, we're now bringing down our risk, and we're seeing how the three M's really interact with each other. Our methodology, yes, we've identified it, but we're identifying it as more risky. Our money management comes in to reduce our risk there, and then our mindset is helped by the fact that we've got less risk on it as well. We can get through this one pretty quickly. We can get through that one pretty quickly. That one's no good. That one's no good. And just think how quickly we're moving through this list now, and all those stocks we've passed over that your mate down at the pub would chew your ear off over 6 out of 10 of those stocks because they're so wonderful and they're drilling out back of Kalgoorlie or something. You don't care. I don't know. Would you go for that as a turnaround play? Not me. I'm going to pass. No. We're seeing just the junk. We're just seeing the detritus, aren't we? In the Australian gold sector, we're only up to beef and Barton Gold. That looked half decent a few days ago. Last two candles, I don't think we need to rush into that one. Okay, this looks pretty good as well. Bellevue Gold, one of the bigger ones now. Those last few candles there, a little bit frustrating is probably the right word, because everything else looks wonderful here. But I think there's a bit of supply working into the system. Okay. Why? Why is the supply there? Hopefully you spotted that straight up. Did you? Did you get it as to why? Why the supply is there? We're at $2. There's your round number, ladies and gentlemen. This is how fickle investors are. $2. We want to take some profits, probably because we got in at $1 here. Look at all the people that got in on that dip. They're doubling their money and they're taking a bit of profit there. So that's why we need to now sort of get up a bit more momentum, don't we? And remove that supply. And once that supply's gone, maybe we can go again. Look, I don't think there's any rush on that one just yet, so let's keep moving. If I had it, I'd still hold it because there's not enough in there to tell me to do anything but a full risk position at this stage. We don't need to spend any time on that. These are no good. I don't think I could be bothered with that one. No. This looks half interesting. We might shortlist. Write this down, a piece of paper, just making a little list here. You can probably right-click them, even in TradingView. I haven't done this, but probably can right-click them and add them to another list, which is just a short list. Okay, and then you've just got your short list to work through in your next round. I think that looks pretty decent. I won't know until I get to my shortlist as to how good this is compared to everything else. But I'm happy to shortlist that one. That one's a piece of junk. Not interested in that one, nor 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 that one. Look, you could go for an aggressive setup here, and I say that because we are bouncing off the long-term trend ribbon with Thursday's candle. It won't be Thursday's, it'll be Wednesday's candle. That's this one here. Is actually very good. Okay, so that could be a bit of an aggressive setup. Just a toe in the water here to trade the holding of this long-term trend ribbon. It's done it before. I'm happy to shortlist this one on that basis. Let's keep going because there's a lot of junk here. Evolution Mining. Look, I could take or leave that one. It's not terrible, but I don't think I'm going to go for it today. And then we're just passing through some junk here. If I've passed over your favourite gold stock, I apologise, but it's because it's junk. I don't think I'm going to shortlist that one. I don't think the candle's warranted at this stage. But if you're going through this process every day, if it does throw in a good candle tomorrow, you're going to see it tomorrow and shortlist it then. Don't waste your time with it today. You just want the best of the best. And if you don't find the best, that's it. You don't have it. You won't do any trades today. Just the best of the best. Oh, look, that one's not awful. It's a bit sketchy. It's up to you if you're into that sort of thing. No. That's interesting. I could happily shortlist that one. I don't think I'm going to be getting into it in the really near future because I can see a bunch of upper shadows there. Okay, but straight away we can see the stuff we're interested in versus the stuff we're not because we're not interested in that, or just the reams and reams of junk. We're only up to K in the Australian gold sector. Look at this thing. Bloody gold's going through the roof, and this. Well, I nearly said an inappropriate word there, but I think you know what I was going to say. That shit is going down. So is this shit. And here we go. We're up to the M's now. We're getting through this list pretty quick. You can see you can get through a list pretty quick if you're using my methodology. We're up to Northern Star, which is, I think, where we kind of started. I like this one. I actually think it looks fine. I'd happily add some risk to this. I know Thursday's candle wasn't the best, but I think it's the path of least resistance is to the upside. And if I wanted some gold exposure, then this one is as good as anything we've seen so far. We're back into nose here. I think that looks good. Or a bander. I'd happily add some risk to that if that's what I was looking for. Odyssey, no, this is all junk again. There you go. Would you bother? It's more of a turnaround play, isn't it? Pantoro. Look, it's actually half decent for a turnaround play. And, if you're going to go for speculative junk, this is better junk than the other junk we've seen, okay? Maybe we'd want a bit more sort of rock and roll happening here in the volume. It's a little bit quiet there, isn't it? Oh, this looks good. I don't mind that one. Perseus, I've covered this again in the evening update there. So I'd happily add some risk to that one. I think that looks nice for a turnaround play. That's a no. Oh, yeah, red 5, happy with that one, no complaints. Might be a bit slow and steady though, okay? It looks a bit like Strike, STX, doesn't it? Famous last words, but no, that one's fine. No, we've done Ramelius. We can see now when we started here, isn't it? This is one of the better setups in gold, without a doubt. No, look, not awful, but I think we've seen better. Oh, I like that one. I don't mind that one because I like the big white candle. It's more of a turnaround play. You might manage your risk accordingly. Just put a little bit on it in that regard and see how it goes. I don't mind it. I like that big white candle. No. Yes, I think this looks good too. Okay, again, more of a turnaround. I'd put this up there with Perseus. And now I'm looking at Resolute. I might lean towards this one instead of Resolute. Okay, but we won't know until we get that shortlist. I'm not actually shortlisting them. Let's see. Yeah, I'm not interested in that one. I'm not bad, is it, Santana? But no, definitely not. No. It looks half interesting. Look, another big white candle with some volume. I could get interested on a turnaround play, but no for now. Saturn, no. That's fine. No complaints with that. It's a smaller stock. It's a little bit illiquid. You can see from the nature of the candles there. But a decent chart, so's that one. So we're looking at TCG, TGM. You can go back in the recording and you can short this. I know there's a few people scrambling to write down these shortlisted ones. Just catch them in the recordings. And here's the thing though, when you get to as you get to the end of the list, it gets easier, doesn't it? Because you know what's good. And you're comparing this, like, if this was AAA Resources, you might have spent a bit of time on it, going, is it a turnaround play? Is it looking half good? What's the volume? When you get to the end of this, I don't need to look at that. I can get through it very quickly. And that's why this scanning process must occur very quickly, because you don't know, see, and I'm looking at this and I feel like I spent too much time on a lot of other stocks, like Resolute perhaps. I think that looks very, very good. Very happy with that one. The only issue here is maybe proximity from the light green zone, but to be fair, I mean, it's given you plenty of buy signals prior to this, and the proximity to that major point of supply. But it's fantastic in terms of the price action, the candles that we're seeing right now. That looks very good. Let's keep going. That's probably the best chart we've seen today, isn't it? Because there's no resistance. And almost frustratingly coming at the end of the list because we've wasted a bit of time, but lets me reinforce this lesson. Don't waste too much time, okay? You have to get through this list. Because that's the gold sector, ladies and gentlemen, A through Z. What else are you scanning? You're scanning the top 200, top 300. You can get these lists off the internet. You can get them from Market Index, by the way. So that's a good place to go. And then you can create these watch lists. And you need to create, this is part of in your trading plan, creating a universe. And I'm only doing this because I know there's not many people here today and I can get away with it. Let me try and find one of these, and I'm going down a very slippery slope here, because if I show you this, you're all going to want one, and that's just not possible right now. If I ever go out on my own, if I choose to do that, and I don't know if I'm at that stage of my life, at this ripe old age that I'm at, whether I could be bothered. As a younger man, I probably would have. But let me go into here, and actually I'm not even sure if I can show it to you, because just the way OBS works. Trading plan, master template, final draft, short term, medium term. Let's try that one. Actually, I probably can. Let's try this. This will make sense in a second. Oh, where's that window gone? Or not? Okay, I know what just happened. Okay, count to 30 and it'll be back. Okay, go here. You can tell that I'm very organised with my filing system. And let's do this, let's try this, let's see if this works. Oh yes. There it is. Okay, so let's go here. Okay, so this Elite Wealth doesn't exist. This was part of a business as part of Australian Stock Report. I didn't start Australian Stock Report, but I was there within the first 6 months. And I was an equity partner in the business. I was pivotal, if I say so myself, in growing that business into what was at one stage Australia's largest newsletter service. And so I spun out of Australian Stock Report Elite Wealth, which was the education arm of the business. It was acquired. We were acquired by somebody else who ran the business into the ground, and I stopped working with them around 2015, I think it was, or 16. So I'm going to guess that this is my intellectual property now, because the company that did own it, it doesn't exist anymore. But what I would do, I would literally write a trading plan for people based upon my personal trading plan, and this was my trading plan. It's a snapshot of my trading plan at the time. My trading plan has changed a little bit. But what I want to give you here is an insight into the detail that you must provide, okay, if you are going to do this for a living. Trading objectives, how you're going to allocate your capital, your trading style, how often you're going to look at the market, your trading frequency, average hold time. And the reason why I started talking about this was your trading universe. So defining what securities you are going to look at every time you sit down to do your analysis. And I started this conversation by saying, well, what lists are you going to download? And what are you going to commit to look at in line with your indices? So if you're a daily trader, it'll be tougher because you've only got so much time in a day before or after market to do this, but you're not supposed to do your analysis while the market is open. If you're a weekly trader, your universe can be bigger because you've got all weekend to do this. Defining your methodology, that's the first page, but it starts at 10, but your trade entries. And this was my price action model. You might have heard of it before. I've taught you about it. Individual candles, strong demand candles. Some of these should be very familiar to you. That's a pin bar is just another name for a long shadow. Blending candles. I've taught you much of this stuff. I didn't just make this up. And we're going down into various different models that I had at the time, not dissimilar to what I'm teaching you now. Scaling into trades. How do we add risk, but also how do we reduce risk? How do we scale out of trades? Trade exits. There's a whole section on trade exits. So we saw trade entries in A4 pages, page 10 through to page 43. Trade exits go from 43 to 54. Then we've got our capital management. Then we've got our trading process and documentation, checklists, appendices. And I don't mind showing you this. I mean, you can go back in the recording and try and copy all of this down. You're welcome to. I'm not going to go I'm not going to scroll any further than that. But it's just to illustrate what degree of detail, if you want to do this seriously, that you do need to go into. And I would literally, at the start it was me sitting down with, I had a small group of traders I was mentoring. They were literally paying the price of a compact car to do that with me for a year. And I literally, for a year, was not quite at call, but not far off it for them. And then we ended up expanding it, and I had people working for me that would fulfill that role. And I would write their trading plan and then help them implement it for 12 months. And we had some great success over that time. Now, that's when I was a younger person. My kids either didn't have kids or my kids were very, very little. And maybe I'm getting to the point where my kids are going to be big enough that they don't need me anymore, and I could probably go back to some of that stuff, but we're getting off topic. How did we start on this topic? We were talking about Ramelius Resources. I'll get back to you, and just give me a thumbs up if any of that was helpful. You can go back in the recording and transcribe those topic headings. This is me. You're getting me one night on a Monday. And I've got a day job. I'd love to go through all that stuff with you again, but maybe it's in the future, or we can touch upon these things as we go. If there's something in there that is, hey Carl, in the recording, I noticed you that. Tell me about that. I'm more than happy to go through that in these sessions on Mondays. We got here because we're talking about Ramelius. We're going to go to the next pick there because we've done gold. I think we can safely say that. Let's go to healthcare. I like Ramsay Healthcare. I'm pretty sure we've talked about this recently. I've certainly covered it in the evening wrap, and I like it as a turnaround play. So, pretty sure we talked about it maybe on this candle here, but it's only printed the right candle since then, and I'm still happy with it. Look, turnaround plays naturally have attached to them a little bit more risk than your bottom left, top right, your continuation setups. But I think that is the key candle here, and obviously we're holding the long-term trend ribbon. So it's all pretty much textbook stuff. We've got a little bit of a point of supply here, coincidentally around the $60 mark. Maybe we'll see the manifestation of supply in some black candles or some upper shadows. But ultimately, 12 months, 18 months, order of magnitude, we could be around there, and maybe this is a bit of a template for it. That's another one that's moving in a very similar fashion. So no complaints. Full risk position, happy to add risk if you're that way inclined. And Colin's third one is A2 milk, which it's going swimmingly, isn't it? There's no complaints there. And this, not that long ago, this one was a turnaround play. In fact, there are probably a few aggressive setups early in the piece there where I've drawn those arrows, but no complaints here. I think that's looking very, very strong. Let's go to Sudesh's after silver and gold, which I did cover gold. It looked very good. I couldn't see anything, Sudesh, that would lead me to think anything bad's going to happen anytime soon. In fact, let's stay there because I do have these in Amy Broker where I prefer to operate, and that's your silver chart.
Last week, I think we had this big black candle, didn't we? Said, oh no, that's not good to see that at the top of the trend ribbon, the trend range, or the trading range. But it's actually held really well, hasn't it, on the short-term uptrend ribbon. So come off with some decent candles. So I'm pretty happy with that. If I was trading, say, a CFD on silver, I could have some risk on this. Yeah, absolutely. Because we know when silver moves, it actually moves pretty well, and we know it tends to lag gold a bit. Zoom out to the weekly chart. There's a little bit of potential there, but I don't think, Sudesh, it's going to be all that easy. You know, you got that, you got that, you got that. Are we, or can we, or should we expect a repeat of this? Look, we're at the point where, you know, I think you could add some risk to it and see what happens from there. Let's go to Linda, who's asking for FND. Let's go to that one. Looks fine. What did I say last week? $3, round number, black candle, minus 1/3. Precautionary measure, which left 2/3 on the table. I wonder if you did that, Linda. And I haven't seen anything since then to dissuade me from the belief that that is still the right thing to do. I don't think we need to take any more off the table, but I am somewhat suspicious of the three upper shadows. Obviously, that's why we did the third in the first place. I wonder if I had that candle. Let's go back. I'm curious now. Did I call it just on that one alone? That's 22. That's Monday. So I did have that candle. There you go. I would have had Monday's candle. So I called it on the basis of these two. That's a strong candle. But then look at Wednesday and Thursday, and we're still seeing these upper shadows. We're still seeing supply working away there. I think we can say draw a line under here now, and we can say on a close beneath. And let me give you a level. So that low there is 270. So, you know, give it a little bit of room, and it might be, say, close less than, say, 268-ish. You know, give it at least a half or 1% beneath that level. If you wanted to go 267, that's up to you. I don't mind. But order of magnitude beneath that, I think that's now your second third, if that occurs, and it may never occur. And then, you know, I think beneath here is your final third, and that would be on a close, therefore, beneath that trough. Okay, and there's plenty of demand that should be in the system here. That medium-term trough, you can see the lower shadow, a little bit of shadow here, but then this big white candle, that's the demand point. And beneath that, if we're trading beneath that, or close beneath that, that demand's gone, and that's frightening. Would also by then be closing beneath the long-term uptrend ribbon, short-term uptrend ribbon. So I think that's the map of this, isn't it? If you have to map out your trade, you're aware, you're mindful. And this is part of that trading process, isn't it? That trading process where we have written these things down, or it's in a spreadsheet, and we are holding ourselves to execute on these prices and the price action. Until then, there's nothing you must do, nothing at all, because we're okay. And we could get the most almighty big white candle to tell us that supply at 3 is gone, and all this excess demand that's still in the system is just taking over again. And it might sound that we're being a little bit cautious there, but hey, we need to know where our exits are when we get into a trade. Let's go to Linda's second one, which is BRK, and it's Brookside. Is that Brookside Energy? Is that the right one there, BRK? It looks okay. I mean, we saw lots of those gold charts that look like this. A little bit of volume at the end. We're turning the corner. It could be nothing more than an aggressive setup, and I'll leave it up to you. It's not really my style, but it's turned the corner, so it's not still in a rampaging downtrend. If that's the right one, I mean, that's what you've written there. It's just that that's a little bit at odds with the FND chart that you asked me about, Linda. That's all. That's why I'm second guessing you. From Adonis, let's go to GMG, which is another wonderful chart. And all we're doing here, Adonis, is we're just literally seeing what we can get for it. We're not near any round numbers. 35 is not a round number. It's just irrelevant in the market psychology. 40, I'd consider 40 to be something where you could just knock out a third just for safety's case. But until then, it's hunky-dory. There's nothing to do here but just hold on and just enjoy it. Just enjoy and just give yourself a big pat on the back for having met me. Let's go to NST, which we have actually discussed. I don't need to spend any more time on it. It looks fine. I'd happily add some risk, but is it as good as a few of those other ones that we saw towards the bottom of the list alphabetically? Let's go to Jesse's now, LNW, which is still a very good chart, a little bit of a pullback. Market's making new highs, and this is, off its highs. A little bit disturbing. We don't often talk about the relative strength comparative down here, do we? You actually saw it in my trading plan. There you go. So that part of the trading plan has some rules around the RSC. And you can see that's why it's coming off now. It's underperforming the market when it's heading down. But no, look, the trend is still very, very good. It's still a full risk position. There's nothing so sinister in those candles to suggest that I would do anything but FRP. But I'd be mindful. We're looking at, well, there's demand there. If we're closing beneath there, the demand's gone. 150, bit of a round number. I don't think you want to trade too far beneath 150 before you're reducing your risk. And in the absence of lower peaks and in more sinister black candles, you might be at 2/3 there because you're also going to be closing beneath the dynamic support we'd expect from the short-term uptrend ribbon. Let's go to LOV. We're getting some great charts tonight. I mean, that's just a magic chart, isn't it? How good's that? No complaints here. Full risk position. If I didn't have it, I'd even add some risk here. I don't think it's so far away from the green zone that you wouldn't just do your standard 1/3 in terms of your money management model. And we're nowhere near any round numbers, much like the other one, GMG. So again, if you've got it, just enjoy the fact you've got it. If you don't, happy to add some risk. And the other one is PXA, which is more of a turnaround play. Again, I keep encouraging you to have that mix of setups in your portfolio. They move a little bit differently with the market at different times. You see here, still very much outperforming the market. A bit of supply in here, not my favourite one, but I can see why you would hold on to it if you had it. I'm not sure I'm going to add risk though, just on the basis of the proximity to that supply zone there. But looks very, very good, and I see every chance that it will get to that supply zone, and then just see what sort of candles gets thrown in around that point, Jesse. Bitcoin for Adonis. Let's head back to here. And we're going to go to here and to the crypto watch list. And there it is there, Bitcoin. Still looks fine. Not a great candle there, is it? That developing Monday candle, that's still a live candle, so won't read too much into it just yet. The trend is still fine. We are obviously in the shadow of this point of supply here. Major point of supply, I'm pretty sure. Just looking at this little peak trough pattern here. And therefore, until we throw in, you can see some confirmation, again, manifestation of that supply. What this needs is just more white candles at the light green zone to just confirm in the market's mind that this isn't done yet. There's still another leg up. I think there will be. But where would you be right now? I think we've talked about a 2/3 risk position on Bitcoin. And I think that's fine. And we're just looking to when we add that third back. That's all. We've gotten rid of a third as a precautionary measure. Obviously, underneath this trough low here, you're minus another third in the absence of price action or candles to encourage you to do so sooner. Let's go to Linda. I don't get the recording. Could you please add me again? Well, I can look into that. Again, it might be to do with the spam filters at your end, so double check if you're junk. And I think maybe I talked about that at the start. I forget. We've covered a lot of ground already today. Ben, hey Carl, can you look at Mesoblast? I can. Extraordinary move in Mesoblast. I know I do denigrate Mesoblast's not so good name from time to time, don't I? I think I've used the words. It's not even really a stock. It's not even really a company. Mesoblast. I might have said that in the past, and I've probably got away with that notion up until a few days ago. I don't know, they had something approved, didn't they, by the US FDA, and we've got a bit of a bump there. A flash in the pan, beginning of something more amazing. Look, if history is anything to go by, it's a flash in the pan. The candles aren't that great either, just in the case, just look at this upper shadows here. It's not that convincing, and there's probably just a lot of skepticism. And I'd say Mesoblast has its fair share of long-suffering shareholders that are just waiting for any blip up to get
out, get the hell out. And there's a big gap here, and the supply is going to kick in here. So, it can... What's working in its favour, and that's sort of the first day there, is that everybody who got in here, look at the volume, look how many people got in here, right? So there's a bunch of people, there's a bunch of supply, massive amounts of supply who bought here. Maybe somebody even listening, that's cheap. Whoa, Mesoblast has dropped a lot, must be a bargain, right? Was $1.30, now 40 cents. Bargain. Beep, 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 back up the truck, right? We've all been there. We've all made that mistake before. Some of you are nodding. Some of you are shaking your head. Bloody hell, Carl. That was me. Okay? It's okay. We don't do that anymore. But you can see that there are a bunch of people got in. But so you can actually see, you can read their break-even prices, right? So there's going to be a bunch of them that break even around 50, a bunch of them a bit earlier on. And they will be working in the system. You can see they're working in the system. Look at the volume here. But if we can actually stay above this level, it looks like we have. It looks like we've actually cleaned out that supply in the form of that candle that closes above it. We've actually got a vacuum. This is the neat thing about this chart. There's actually a vacuum of supply till you get to the next bunch of suckers, all right, that regret ever investing in Mesoblast, and that'll be around 80 cents. Is this one to speculate on for the move from here to 80, where I bet you there's going to be a whole wall of supply there? Or is it one just to keep moving, like we did on many of those gold stocks? And I can't answer that. That's up to you. What I can do is read demand as a blow and say, look, I think we're back in a state of excess demand. That close is important above that key mistake level. And yeah, there's every chance it can fight its way into 80, but I don't know if I want to participate in that fight. But if you have it, I think there's, I've always got to remember, I'm talking as a person who doesn't have it and wouldn't own it for that battle. But there are some people potentially listening that have it, and they're wondering what they should do. And I can't tell you what you should do. You should do what you should do. But if I had it, yes, I can see a basis to holding it to fight that fight and get a better price to get out. Let's go to Adonis for US. We'll do those in a second. I won't do any more Aussie stocks. We'll just get to the end of this list. For Haraju, we're going to look at ANG, which looks very, very good. No complaints, Haraju. Happy to run a full risk position on this. There's nothing in that chart to suggest that we shouldn't run a full risk position. If I didn't have it, look, I could add some risk. It's a bit of a sketchy old chart, and it's a bit of a slow but steady one as well. So on that basis, if that's what you're looking for, then happy with it. No complaints here on the weekly chart. Nothing sinister in terms of big supply. 50 is a bit of a level, okay, but more of an intermediate round number for obvious reasons compared to say $1. So hunky-dory there. I just don't know if I'm adding risk on that one compared to some of the other charts that we've seen. But happy holder if I've got it. SGR, we have talked about this for potentially an aggressive play. It might have been around here, and that would have gone horribly wrong. But that's what aggressive plays are. And funnily enough, it's actually warming itself up for another crack at it. And I think maybe that candle there, or that candle there, or that candle there, probably getting back towards it. So I can go for an aggressive setup, a small amount of risk, knowing full well it could go horribly wrong. But getting in a bit of risk here on the basis that it may be setting up to move into a sort of more of a turnaround play. So on the basis of an aggressive setup, which has its risk therefore managed accordingly, Haraju, it's a yes for me. And that might surprise some people because it's horrific, but we are looking at this with different eyes. Let's go. We've done A2 Milk, Haraju. That one still looks very good. Adonis is asking about NST. That still looks very good. Hoozle's here. 40 isn't old by any stretch of the imagination. Hoozle, if I was 40, I'd be fine. I'm a little bit closer to the next round number. We're talking about round numbers. There's a bit of resistance on my part to get there. Let's go for PAA. We talked about the intermediate round number of 50, didn't we? This one looks good. I have no complaints about this one. Great trends. The price action is a little bit overlapping, and I think it's because of the monstrosity that is this giant black species-ending event here. And you can see we're just trying to deal with it. But this candle on Thursday is great. That's a really strong candle, a little bit of a pickup in volume. I don't mind this. Look, if I had it 100%, I could hold it and see what happens up here. If I didn't have it, could I be bothered fighting what's up there? I think I could, because there's enough room. There's enough room between here and our bug out point, which is down here, right? And if we're getting around here, it's better than 1-to-1. I don't mind adding some risk to this, but I might manage that risk accordingly on the basis that this is starting to be a bit more of an aggressive setup because of the severity of that big black candle. But otherwise, it looks fine to me. That one for Hoozle. OBL, which I'm pretty... I thought that was that Oraband, and that's ORA. OBL, is this an aggressive setup? Not really. Not really. I think we could do a lot better in terms of aggressive setups. So big white candles, full white candles, big volume showings, more of a base pattern, high peaks and high troughs at least. And yeah, no, I'm going to say not yet for me. I still think that's more of a bounce along the bottom than an aggressive setup for me. So it's a pass. If I had it, well, I wouldn't have it. But on the basis that you could maybe get a better price into what is still very, very strong long-term downtrend ribbon, maybe you could hold it on that basis. Let's go to, on a break of 31, I'm in. Maybe that's GMG. I'm not sure which one you're referring to there, Adonis. And Adonis is giving us, on a break of 72,950 for Bitcoin. Yes, that sounds about right to me. Mesoblast is a punt, runs purely on hype and more hype. And, you know, that's pretty much consistent with what I had to say about it. Let's go to here, and we're going to head over and do our US ones and head back up the list. Don't put any more in the bottom of the list because I won't see them because I'm now going back up the list. Let's go to BV from Jason. Thank you, Jason. Brightview Holdings. Looks amazing. As soon as we get to the US, it's automatically the best charts we've seen all day, isn't it? The only problem I have with it is distance from the light green zone, so that might just pull back the risk management a little bit, because the further away you get, the greater your chance of a mean reversion. But I will go here next and just see what's hanging out there. Bit more of a turnaround play. That's not a problem at all. There's probably going to be a bit of supply through here, so you can see from, say, 1330 into about 14. I reckon we'll see some supply. So keep that in mind, 1330 into 14. It's not a deal breaker yet. It's just whether we can make the reward to risk work on that basis. So where's our bug out point? Is our bug out point probably, certainly there's a bug out point there, and then the short-term uptrends, probably it'll be here by the time, you know, it's going to keep rising. And let's say, you know, by then we'll be all out. And then sort of 1330 into 14, you know, if we say this is our point of supply here, can we make 1-to-1 with an entry around there? And I think it's about 1-to-1, so yes. Now, again, what we're doing here, this is not part of your methodology as much as it's part of your money management, but it can help you distinguish between trades or select one trade over the other, because if you're selecting between 3 trades and one of the trades has got 1-to-1 like this, the other trade is a very, very similar setup, turnaround play, and it's got 3-to-1, and the other trade, well, it's not the same, so we won't categorize it as the first two, but it's an aggressive setup, and that's 1-to-1. Maybe we really like to take that one. Now we're choosing between these two, and we say, well, why would I take the 1-to-1 when I can take the 3-to-1? You know, same quality of setup. So we are also taking this into account when we're picking between trades. Let us go to the next one there. Happy if I had it, full risk position if I had it. If I didn't have it, I've told you how I would consider it. CLF, Cleveland Cliffs, looks great here, no complaints, and it looks like we're actually, well, look, we're not quite breaking through that point of supply there, but we're close enough to it with a big white candle that's closed near the high. So I don't think it's working in the market's mind anymore as a problem. Let me fix that, and that, I reckon, is that point of supply, and this is looking even better now. This looks very, very good for a turnaround play on the weekly chart. And then if you look up, there's a little level there, but hardly, I think that will be hardly anything to worry about. It's really up here.
and I think we're fine. So that looks really good. I've got no complaints about this one. If I had it 100%, I would hold it. If I didn't, I'd be happy to add some risk to that. Let's go to GCMG, which is GCM Grosvenor. GCMG, that's right. Great candle, great break. The only problem I have is just the proximity to 10. If it's not our first rodeo at 10, we'll be fine. And it's not, so it may not be a major issue here. If anything, probably the high 10s will be more of an issue. No problems with it at all on that weekly chart, just making sure we've got reward to risk probably into that level. But there's nothing on that weekly chart which would dissuade me from taking a trade on the daily chart. And there's nothing on the daily chart which would dissuade me from taking a trade. $10 might be just lurking in the back of my mind, but as I said, it's not the first time we've been there, so it shouldn't be too much of an issue. And I'm just trying to point out, maybe Jason, maybe a thing or two you might not have seen. Tremendous candles here for me. Just that's the candle, like that's the one. Not to say that these are better candles, but obviously we want to get in as early in the run as possible. Big extension from the light green zone. That's the only thing that's worrying me. Again, not saying you can't take it. I'm just saying if you take it, and there's every reason why you would take it, just starting with a smaller amount of risk, and then you might get a pullback, and then you get a great set of candles, and that's where you add a bigger bit of risk. But nothing there on the weekly chart to dissuade me from taking it. If I see the signal on the daily chart, and those candles are great big signals, so no complaints from me at all. I'd be happy to add some risk to that, to have some skin in the game on a chart that looks that good. And MGY, obviously in a perfect world, hindsight speaking, we'd love to get in 2 candles ago. And this might be the quality of the candle from 2 candles ago on the other one, and it's great, no complaints here. Great price action, great candles. It's moved through the 25, which can be a bit of a round number to deal with, but we're through that. A little bit more frustrating, perhaps, than the other ones, because we've got a bit of supply that might work into the system here and here. Let's get rid of that. There we go. But very, very strong. Yeah, it's just a matter of going through and comparing and contrasting. So, well, this one's got an easier run than that one. Because those points on the weekly chart, they're not that old, and they may well come into play. But on the basis of what I can see here, I would be an absolute yes in terms of adding risk, and if I had it, I would continue with the full risk position. Let's go to, that's all of those there for the US market. Adonis has got AER. I think you can do all of those, Jason, no complaints. AerCap. No complaints here at all. Happy to add some risk. The last 2 candles aren't ideal, obviously. They're little black candles, but they're insignificant compared to the scale of the white candles that are there. Would you wait for a white candle to pop in? Yeah, I think you could do that as well. But if you couldn't wait, then I wouldn't complain either. I don't think we're going to find anything on the weekly chart here. And there isn't there. A little bit of a loss of momentum here on the weekly chart. And that would be my only criticism of this. Maybe we're going to just move a bit sideways here in a bit of a consolidation zone. If we can find something that's a little bit closer to the breakout, a little bit closer to the green candle, that might be preferred to this particular chart. Let's go to, and we might find them on your next one. Adonis MMYT, MakeMyTrip. There's no loss of momentum here. If I had to pick between the two, I would go for this one over the other one. No complaints at all. I'm guessing if I get to the weekly chart, we're all blue sky. So yes, yes for me, full risk position if I had it, and if I didn't, I'd be happy to add some risk to that. And if I had to pick between the two, certainly this one is better than the last one. And let's go to your third one, which is MU, which is Micron Technology. Yes, if you have it, I still think you're a full risk position. I don't think you're asking me about this one to get in, Adonis, looking at those last few candles. I think you're asking me about this one because you've got it and you're wondering what to do with it. Are we taking any risk off the table at this stage? I don't think so, because I know there's a shadow here. 120 I wouldn't fuss about in terms of a round number. I don't think anybody's going, well, 120, that's my level. So yeah, full risk position. You don't want to see that shadow confirmed with another lower shadow. Close beneath that little low shadow there, which would become a trough if there was another candle up. Just keep an eye on those levels, but otherwise, no, happy holder on that one. If I didn't have it, no, I wouldn't be getting in because there's a bit of supply up the top there. The market's just trying to feel out which way it wants to go next. Let's go to, well, that's it actually. That's all the US stocks that have been requested. I'll check down the bottom of the list to see long and strong on all three. So Adonis is on all three of those, which is great to hear. Great to hear. And that is our list for today. I'll give you one last hurrah. If you want to put, I'll literally do one more, first in, best dressed, or forever hold your peace until next Monday. And I think we're good. And WHC, says Brent. All right, we'll do one more. WHC, head over here. And WHC, which is, it's a little bit all over the place, isn't it? Let's go back to our normal zoom. Fighting the battle. Yeah, I would have honestly, I would have written this off with the chart that it had through here and on this candle here. I mean, on this candle here, it looked bloody horrific. I mean, I look at that and I just go, this show is over. And it's come back with two tremendous candles on Wednesday and Thursday, but only really to hit what will be, I expect, a very, very strong area of supply. If we can close above that level, again, the fact that it's doing it when I think a lot of the market didn't expect to, there could be some shorts in here that could be put under some pressure, and that could just give you a little bit more of a pop. But if you pop above that, look at these black candles, plenty of supply in and around this zone, and that would be your next level. If I had it, I'd be tempted to, on the first black candle, the first upper shadow, to knock some out and just not run a full. I mean, if I had a full risk position because I was a true believer, I like the dividend yield or whatever it was, that's up to you, of course. But what I would do is, start to extricate myself from this position. If it keeps printing white candles, you don't need to do it. But just watch this level here for potential black candles and upper shadows. And I think not running a full risk position, even if you still want to hold on to 2/3 or at least 1/3, that's fine. But just getting some out on the basis that it was not looking very good prior to that. Okay, Linda, I'll try and sort that out. Okay, let's head over to the PowerPoint presentation one more time and just remind you that everything we've discussed today was information. Before you act upon this information, you should consider it carefully or seek the help of a financial professional to determine its appropriateness for you. Markets go up, markets go down. You could lose money. It's important that you make good decisions for yourself, because ultimately it's you and not I who's responsible for everything you choose to do. Been a pleasure chatting with you today. Hopefully you enjoyed the session. I did too. All the best for your trading and investing until we catch up again. Bye-bye for now.